Welcome to India Podcasts.
When the panic sets in, people do go like a pendulum in stock markets. It moves from euphoria to huge panic.
The rebound that we're seeing in the market. So will the correction period again come?
Today, market is slightly more confident about managing COVID. And if it is not found to be true, then it may again go down. India is considered now a different country in last 3 months. One of the reasons is basically the geopolitics. Stories that are coming up about the China taking over even Pakistani stock exchange. In fact, even in Bangladesh stock exchange, they have stakes. Currently, we don't have much in Chinese investments into the listed space. One thing retail investors should do is to figure out their own objectives, because you will get a lot of SMSs, WhatsApp, friends chat. My request is, suno sabki, karo apni.
Thank you so much, Mr. Ashish Chauhan, for giving us time on India Podcast for viewers and listeners today. It's a pleasure to have you with us today.
Thank you.
So we would begin asking, we know where we are standing in the situation currently. We are in the most unprecedented times, and markets have played a very, very important role, and also a very uncertain picture has been playing out when we talk of markets. To begin with, I would first like to understand from you your own picture of this entire play out since February, if we may understand how the COVID-19 has played up in your personal life also to begin, and then we go to the markets understanding around it.
COVID has been a shock for the world and for countries and for societies and cities, and also for each individual and family staying in that city. So clearly, I stay in Mumbai. It is one of the most affected cities in India, and perhaps among the most affected cities in the world. And I do work. I have been working through the COVID period throughout because of the job I have, and my wife also is a doctor, and so it's a very rare two people working household where during COVID also we have been working. And it is a change which it has brought to all of us. I think all the evening meetings have gone, and we do come home early. So that's a news, and that's a new adjustment which we have to make to each other, because the fact that in Mumbai, at least I am used to coming really late home, and suddenly you're found home pretty much early evening. And so
You spend more time with your family and your wife then. Is that an adjustment to make then?
Yes, and also the child. So it's a new way of life, and of course more video calls and more sort of time chatting up with families across the world, friends, and so on and so forth. It's a very interesting inward kind of experience where we were all going very outward for many, many years, rushing in different directions, and suddenly you have a break, and now suddenly you are looking inward and within yourself also, in addition to sort of chatting up with your friends, families who you never did for several decades sometimes. And so it's a sort of a change for the better probably, but I wish we had a what I call a balanced life earlier. And whenever the situation improves, I think many of us will continue to have a much more balanced life than what we had earlier.
So balanced life is the lesson that you have taken from the COVID-19 coming in. So now we move to the markets. First thing to ask is, it was quite not expected whether the Indian markets would be continuing when the pandemic had set in, because we had hit our historic low at that point. What led to the Indian markets, and when I'm talking about the main indexes there, Nifty, Sensex, to continue, where a lot of suggestions were coming that we should also close our market, it won't be possible, stocks had fallen off. Was there a period of uncertainty and volatility so high that even that crossed your mind? And how were you looking at it at that point? And now the scenario has changed.
So when the panic sets in, people do sort of go like a pendulum in stock markets. It moves from euphoria to sort of huge panic in few days or few months time, and then it continues the process till the time it starts moving the other direction. So when the COVID sort of lockdown started, there was a worry across the world. Nobody knew how this disease spreads, which is true to some extent even now. But people have figured out a lot of things over the last 2-3 months. But those days it was like very scary, and every country was trying to figure out its own ways to handle things. But the way Indian government handled, I think, the markets was phenomenal, because many doomsayers had predicted really bad numbers. If we had really sort of what the doomsayers or the epidemiologists or those people predicted, literally 5-6 crore people having affected by now, and probably few crore dead, which has not happened largely because India went through the lockdown, and it was the most extensive lockdown. Even China only closed one of the provinces, not the entire country. And despite their dictatorship and their ways of doing things, they couldn't handle even that province. While as India, with all states and federalism and democracy, continued for almost 70 days. So for me, it was really well done as a society. And when it was announced on March 23rd, I think government had done homework before. They had given one home curfew or Janta curfew before. People had started anticipating. They had also put the stock markets as essential services almost few days before that by issuing notifications. They clearly wanted the markets to be on. And one of the reasons why it had to be on is because when panic sets in, and you require liquidity, because many times in panic, people who are holding assets do not have the money, and they want to convert it fast into the money, and at whatever price. So when there is no transparent market available, which gives you your funds when you sell your assets like stocks, then you may sell it at an unbelievably low price. And we have seen this in the past. When the markets go dark, the societies also go dark. And that's where I think the government wanted to, and the regulators, they wanted to keep the markets open come what may, so that even during panic, people are able to continue to kind of create liquidity and also invest in case you find good opportunities in the low prices. And I think both happened. A lot of people shifted from stocks or mutual funds into cash, and rightfully, because they needed money. And there are many more people who have come in afresh, wanting to invest. And so it was in a way, a good thing that the markets were kept open. Of course, on March 23rd, when it was announced, people thought even the markets will be closed. And in some ways, they were worried, all the brokers and all investors, saying, what will happen to my office? Will I be able to go to office or not? Can I work from home? All those regulations were changed. Even the state governments across the country cooperated with us. They allowed our brokers to go to office. Of course, there was an initial period of troubles, but everyone overcame, and the markets didn't stop even for a single second. All the trading, clearing, settlement, all the banks, everyone worked hard. Depositories, registrar, transfer agents, regulators, everyone worked hard across the country. Almost 3-4 lakh terminals, almost 10 lakh people worked to ensure that the markets continue to remain open day to day, every day. And people who have sold their stocks get their money in T+2 basis. And that, I think, has proved many things to the world, that their perception about India being not capable of handling the pandemic, I think, has now slowly given way to much more confidence. And of course, India, in the meantime, ended up providing a lot of medicines to the rest of the world and a lot of other equipments. And so people have started appreciating India's large-heartedness, India's ability to manage its society, and as a society which is self-disciplined. Those are the things, I think. But one more thing came about is the over-pervasive technological edge which India has developed, because it's all automated. And across literally every pin code in India, we have investors. And there, pretty much everyone worked, and that shows how much of backup, how much of business continuity has been built into India. And that is also shown in terms of managing the BPOs for the world, or the software sort of progress, software development that is happening out of India. it did not stop, right? So no banks in the world which do their back offices from here stopped. And that shows the resilience that India brings on table from within for like stock markets or banks to work, but also working, making other people's economies work. And that is, I think, a very, very creditable job India has done over last few months.
Mr. Chauhan, also where you have mentioned about the trust of the global investors in India, because we see the increase in FII. One, I would like you to guide us into how you see the FII investment in India increase further going 3 to 6 months from now, and what could have been the reason for that kind of interest coming in India from the FII investment increase here. The reason being the fundamentals aren't, the macro fundamentals aren't very strong. We know we are almost at the recessionary mode. The economic slowdown was already there. So what is that macro understanding according to you being fundamentally not so strong when we talk of the economic picture, yet we have the global trust in Indian emerging markets that the investors have been here, and that's led to the rebound, if we can say so.
See, there are several factors at play. One of them is what I call extremely short-term situation of liquidity easing, global liquidity easing. Although India has not splurged money in terms of the packages, economic packages, but US, Europe, China, Japan, all of them have splurged humongous amount of money just to ensure that the economy continues. So they have literally pumped in much more than what they had pumped in 1 month or 2 months. They have pumped in more money than they had pumped in during the entire global financial crisis. And that tells you that there is a huge amount of liquidity that is sloshing at pretty much close to zero cost. And that some of them is coming into markets like India. And that's where you see some upside, although India has not still leveled off with its peak. It's still pretty much 25% or 20% lower. But US, you can see some of the indexes like NASDAQ have already gone beyond what they were in terms of peak before the COVID. And so you can see that liquidity has moved the markets in a short run. But even in the long run, if you see, India is considered now a different country in last 3 months. So one of the reasons is basically the geopolitics. For me, the geopolitics, it's the economics for breakfast. The geopolitics is changing so rapidly for post-COVID world because many people had tremendous hopes, which was built over almost 40 years on China taking over from US in a more positive way. Instead, the COVID and post-COVID tantrums which China started throwing on India and Vietnam and Australia and Malaysia and Philippines and even America is basically telling people that they are not a very sort of responsible player going forward. And that is actually creating a scenario where all right-minded democracies, which are liberal, they are kind of moving away and creating their own blocks. So this is, for me, in early days. But India is going to play a very large role, not only as a supplier to the world, but also as a consumption, because India is also a very young country, unlike China, which was basically dependent only on the export orientation. Now you have an India which is much more confident. It has played a much more positive role by supplying medical equipments and medicines and other, even sending doctors. So for me, India is a new India in last 3 months, and that's what that confidence that world has now is also going to show in the long run.
The rebound that we're seeing in the market is going to take another correction mode because we do have the economic numbers going to play out. Like as we are going to the unlockdown, which is going to take its own timeline and cycle to go there, the companies will take time to come back to their footing. They're all into the setback mode and the shocks have not been absorbed yet. So will the correction period again come? And also, as you're saying, geopolitically, we are in an advantageous situation that way. So if you could explain that the correction is likely to come around. So is it the space where we can relax and believe that things are back to normal, or we might go through a jerk again? Like in
All
2000.
these things, yeah, all these things depend on how the COVID as a disease plays out.
Okay.
It's still early days. The first wave got what I call handled successfully compared to any other large pandemic the world has seen in the past. although none of us have been witness to that. But if you see the stories and if you hear the literature or read the literature, you realize literally millions of people died in Spanish flu and even earlier plagues and so on and so forth. And they changed societies, pretty much the world societies forever. And they were slow moving because the world was moving slow those days. And this is very fast moving, but the world kind of gathered together, shared experiences, and managed it reasonably well, I would say, compared to what we did as a sort of as a race or humankind 100 years back. But that doesn't mean we could not have done it better. We could certainly have done it better compared to what we did. And that basically is what I call each society has to optimize its own issues which it wants to take up. And there are several thousands and millions of issues which a society is continually trying to resolve. And this came in suddenly. Many leaders kind of got blindsided. And there are sort of, you can see Europe got hit much worse than any other country. Then now you can see US numbers, but that got in a way solved in some ways. But suddenly you have now a second wave where the numbers have started increasing over last 1 week in especially Western countries. And India is also now seeing the numbers increasing compared to, I think we are the second largest.
Taken that impact, right?
And for me, in the size of India, it's not an issue. In fact, the number of medicines that have come into play, like remdesivir or flavipir or even dexamethasone and dexlansoprazole or many other, in addition to the HCQ and azithral plus zinc oxide kind of framework. Now, and so my understanding is people have understood how this disease progresses, what are the different ways to manage it. And so I think the death rate, if it comes down to manageable, then this could be basically something which one needs to be happy about. If we are not able to reduce the death rate in next 2-3 months and the numbers keep on increasing, we will have a serious issue because this is a health issue. We can solve it partially by pumping liquidity, but health issue cannot be fully resolved by putting more money.
Will the macroeconomic picture have this correction mode coming back to the markets? Because we have seen a rebound right now, but now we are seeing the unlocking period. The companies will now start getting back on their foot with unlocking. Working will start. Migrants will come over back to their work. Everything will take slow and steady moves. So there will be a slowdown in the markets to correct back its value and then come back to making the peak way, or the bull market we can trend back to again. Is the wave going to?
Yeah, I think so. But if the COVID is a what I call large cloud which is hovering, and if we are able to manage as India that framework, then I think the economy is back on track. Pretty much the unemployment rates which is now coming out on informal basis are saying that pretty much the numbers are have reached pre-COVID levels. And so that is telling you that most factories have opened up, although grudgingly, and so on and so forth. But everyone is getting some work, and that is like a huge boost. Vis-a-vis a complete uncertainty even in April. And so for me, we have made tremendous progress, but that cannot be done at the cost of health and life of the workers. And that's where I think some to and fro will happen. But ultimately, the crux of the matter will be if we do have ability to manage the COVID spread, and more importantly, once you get COVID, how do we get you out fast and safe? And in fact, if you look back, there are many, because COVID is a worldwide phenomenon, it also hurts the rich people as much as it hurts poor. It is being in discussions. We discuss so much. But if you look back at, say, dengue, it's basically a tropical disease of poor countries. And so that's why it's not discussed. But that doesn't mean it is a medicine or a vaccine or anything, right? And still, basically, Indians have learned how to manage the disease using some methodologies, the doctors and everyone. And that's what will finally work out. India, fortunately, is a young country. It has much more resistance to this kind of things. And so I think India will come out in a broadly much better than rest of the world going forward on
Mr.
this.
Chauhan, where do you see the market participation being more in which sector? You have mentioned that retail investors' participation had quite increased in the last few months. Do you see that pattern developing or it will again shrink down going further? What could be the reason for that? Because again, we will have less of money, cash in hand for the new investors to come in. So how do you explain the retail investors coming in more and institutional investors? What is the participation volume and ratio that you see going further in the markets?
In a way, first month or so during the panic, the foreign institutions started taking money out, and that's why you could see uh, the reduction in the index levels also. And when index started coming up, people staying at home, especially the educated people who were working throughout their lives, started getting a taste of television. They started checking out how all these things happen. The brokers started aggressively pushing them to open accounts. And so we recently, in I think month of April, completed 5 crore investors registered with us, which is like pretty large compared to the nearest exchange, almost 2.5 times. And so that tells me that each month we are adding like 10, 20 lakh new investors registering with us. And so that is telling you that more people have got interested. They've got a taste of how the investments happen. Many of them are trading, that is buying, selling immediately. And that's more what I call a speculative game. It's not a investment game. So I would still wish that many of them, once they get used to this, start investing for long term, because when life goes normal, they will have to still work during the days, earn money, save money, and then try to increase the money which they have saved to even larger amounts rather than trying to speculate incessantly throughout the day. So those are some of the worries which all of us carry. But overall, it's a good thing that more people are coming to the markets. They are understanding how these markets work, and good also the markets continued. So they know that they have confidence in the markets, that markets will service its investors continually, come what may. So those are the good things that have happened to the market now.
With the Chinese money in the market, is there a worry around that? And is there a national security issue also looming around that front? Because we know, as you said, the geopolitical situation is not great. So is there a concern about the Chinese money in the Indian market? And a lot of companies which are listed also have a lot of money from China in them. So how are you looking at that space?
This is what I call, again, geopolitically, these are issues. In fact, American government has announced that they may not allow Chinese company to remain listed for long. And many of the Chinese companies which are listed in America are now listing on Hong Kong additionally. And so in some ways you can see all these things happening. India also is rightly worried because India is the most affected party, being the nearest neighbor. And also a geopolitically a competitor of similar size and similar ambitions. And so India needs to worry about it, especially given what stories that are coming up about the China taking over even Pakistani stock exchange, of course, right, in a legal way. In fact, even in Bangladesh stock exchange, they have stakes. And so there are legitimate worry. In fact, London Metal Exchange also is largely now owned by the Hong Kong stock exchange, and so on and so forth. So it's a worry from variety of angles for policymakers, and they are right to worry about themselves. That is their job. And as market participants, we have to do what the regulators say. So I wouldn't give it too much of a problem because we have to stay within our national objectives and whatever the sort of the government decides. So I would say currently we don't have much Chinese investments into the listed space. I have been told, and I have read newspaper articles about the Chinese investments in IT companies, the consumer related e-commerce companies and all. But for us in stock markets, we don't see any significant investment that is there as of now, which is reported.
John, last question to you is: what is your message for the retail investors? We know the somewhere the bond market was also volatile. What is the safety net for the retail investors going further? The bank rates are low. So at this point, what is that message that you want to give to the investor that they can feel because there's again, as I told you, there's inhibitions about correction coming around or not coming around, because we're still uncertain on the unlockdown phase that's coming in. So what is your message for the investors, the retail investors particularly there, how to keep their safety net in check and move ahead in the
So
markets?
the one thing retail investors should do is to figure out their own objectives and their own needs. Uh, I would say they have to learn to invest rather than trying to go by daily. Today in the television, actually business television, if you buy in the morning and sell in the evening, it's called investment.
Yes.
That is not investment, right? The investment has to be over 5-10 years. You can watch your prices of the stocks, your portfolio value, and so on and so forth. But don't invest even when you invest long term, not daily. Daily you shouldn't do at all. But if you do it for the sake of sort of enjoyment, don't do more than probably 0.1% of your assets size. And large portion, especially for young people who are coming into the market, that if you need a house, worry about building that. If you need insurance, worry about doing that. If you want some cash balance in the bank so that in difficult times it's available to you, create your PF, create your NPS kind of models. And then in stock markets, again, there are many variations of assets that includes gold bonds, that includes pure equities directly. You can go through mutual funds. You can go to bond markets where you can invest in government bonds or in the PSU bonds or corporate bonds of AAA or even lower. So many of them will, the plethora of instruments is so varied that if you are not an expert, you may get confused. But since it's your money, you need to be very careful because you will get a lot of SMSs, WhatsApp, friends chat, television guys, everyone giving you advice. But yeah, my request is सुनो सबकी करो अपनी. पैसा अपना है, हमको बचाना है, उसको वृद्धि करनी है, नहीं कि बिगाड़ देना है. तो इतना ही पैसा वॉलेटाइल चीजों में रोके हैं जो what we can actually afford to sort of not worry about. True. If you put in a lot of money and then if markets go down, because every time there will be some worries in the stock markets. Yes. Stock markets actually anticipate all future events that are anticipatable and sort of price them in. So the COVID was not anticipatable, and that's why it kind of came as a shock. But
have we anticipated it right now? Have we anticipated COVID right now? Are we in the right space? कि अभी बाकी है कुछ shock absorb करना?
Currently, the way I understand, I don't invest in stocks because I'm not allowed to. But my understanding is that today market is slightly more confident about managing COVID. And if it is not found to be true, then it may again go down to some extent. But broadly, the downside, which was so large, is over. At the same time, how the world works out, how India works out in the newer scenario is what we need to see. And that is where your upside has to be looked into. But there won't be any day or any period in the market where you will be completely confident that market is suddenly going to go. That's not the market. That's not possible. Right? And that's why you will always have to keep that uncertainty in mind and invest only what you can afford to. Check out with your sort of advisors, check out with your family how much money you want to really invest and do for long term. Of course, if it is not working out in medium or short term, you can come out, but don't try doing day trading if you are not an expert.
So we hope that as the economy is looking to come back to shape within a span of a year or two, we are not very clear about that as well. Markets continue to have the confidence, as you say, in a very simple term. You said we're just confident. We're not getting a clear cue from you, but we got a sense of it. So thank you, Mr. Chauhan, for sharing your particularly your personal experience of life, how things have changed for you, and of course how markets will be panning out going in future. So thank you so much for sparing that time with us. Thank you.
Brought to you by India Podcasts in association with ICI Healthcare.